Madhavi, will 5% Q3 GDP print push RBI to shift more focus to growth versus inflation, or is inflation going to be the top priority even now?
I think RBI is quite comfortable currently with the growth momentum. They had not shown any kind of, concern with regard to growth being a worry at this point in time. I think they're very clear, at least in the Reserve Bank internal committee, they're very clear that a higher inflation is what actually impedes growth in the medium term. So I think
Hmm.
sitting today, the policy focus is pretty much very focused on inflation being the demon around and needs to be controlled to ensure that the sacrifice ratios of the output actually turns out to be lower. I think they're very clear on that front that inflation is going to be leading to a much lower output than the other way around.
Right. So, what about you, Yuvika? The minutes of the latest RBI's Monetary Policy Committee meeting really revealed diverging opinions among the members of the panel. While some members stressed the importance of reining in inflation, the others cautioned against the impact of rate hikes on growth. So, what do you expect?
I think clearly the Jan 23 CPI inflation number, which proved to be a shocker, has somewhat upset expectations in the market about what is RBI likely to do going forward. Where
Yeah.
most of the market participants were looking at probably March being the last of the
Sure.
action on the rate tightening. Clearly, expectations have moved into a April rate hike. Also, being a base case scenario, we ourselves are no different. We are looking at a 25 basis points hike. And I
Okay.
think thereafter, the stance of RBI should largely become conditional on data. When I say conditional on data, both growth and inflation. And I think this time, with the kind of recent trend that we have seen on the CPI inflation front, inflation is likely to take precedence over growth, at least in the near future. And I think that is something that internally also MPC members, at least on balance, would gravitate towards, despite the division on opinion that is emerging out of MPC. But the division in opinion also tells us that probably we are nearing the end of the rate tightening cycle somewhere sooner than later. So it's only a matter of time that the terminal rate is achieved.
Okay, Madhavi, what about your take? The RBI has been on this aggressive rate hiking journey since May 2022, cumulatively raising by 250 basis points. What do you expect the rate actions going forward from here? Another hike going forward in the next policy?
So I think the world order has again evolved dramatically between the last policy and the minutes, and even at this point in time, where higher global and Indian inflation prints plus the consistent repricing of the Fed terminal rate has clearly posed risk to emerging markets reaction function. Unfortunately, unlike the developed markets, emerging markets, most of the emerging market, I would say, do not really enjoy the tight labor market scenario that the West is now struggling with as far as the input to domestic demand is concerned. So I think we are closely watching the consistent global policy repricing, the pace of global inflation evolution, and even the case of impending recession. All of it, would eventually shape the DM central bank's monetary policies, which obviously will have implications for India. So I think back home also inflation is, at least the near-term inflation is fraught with some bit of uncertainty, especially with the last print that came out. There were a lot of discussions about, whether the serial inflation was, input correctly by the CSO or not. But nonetheless, assuming that the number was indeed correct, probably the next print also will be a 6+ print on headlines, which will be the February print. And there's a good likelihood that the fourth quarter of FY23, inflation will probably overshoot RBI's revised forecast by around 50 bips, assuming again there's no past data revision that you may see. So that essentially will strengthen the case for the Reserve Bank to raise rates again in April. They have been very non-committal, and very honestly, central banks across the world have been. At least DM central banks or even emerging CBs have sort of indicated that incrementally the rate hikes will be slower, but nobody's saying that we are done, right? So I think RBI would continue to be very non-committal on future part of rate hikes, and they also sort of understand the global situation around is very fluid, and that may demand frequent macro reassessment. So I think to that extent, I believe that RBI probably would be sort of tied to the West in terms of how much financial sector disruption it actually brings to the world if the global repricing of rate hikes continues beyond May. right? Because early part of the year we were expecting that Fed would be done by March. Now we're talking about it spilling beyond May as well.
Sure.
I think
So higher
somewhere
for
you
longer,
will.
and what could be the terminal rate then? I mean, like, are you also looking at a revision of that from your own end?
Yeah, so I think as Yuvika said that in December we were like we're done by March, but today
Yeah.
sitting today we all are talking about an April hike being very high probability, and I think it could spill on to next policy as well, depending on how things pan out. But as I mentioned, the unfortunate part of the whole situation is that emerging markets, including India, are not having the same labor market dynamics as the West is enjoying, and thus there's always a fear that we may over tighten, owing to the sort of compulsion that we are having versus the rest of the world. So I think to that extent that we need to offer a much higher emerging market risk premium, we might end up tightening much more than required. But again, it's still very early to say whether we are done by April.
If you like the video, do like, comment, share and subscribe.